Hi everybody, in this video, I will show you guys a simple but very powerful moving average scalping strategy you can use to increase your account size immensely and make a lot of profits. The best part of this strategy is you have to risk only 1% per trade, so if you're new to scalping or still learning about trading, this simple strategy is a good place to start because you can make decisions quickly and hit buy and sell without thinking about fancy indicators, tools, or other such things. I'm going to be explaining the strategy and the indicators used in more detail, so let's dive deep into today's video. By the way, if you guys are interested in amazing free buy and sell trades, make sure to join my Telegram group, the link is in the description. So this is what our chart is going to look like when we are done setting up our EMAs. These three lines you see on my chart are just regular moving averages. The only difference between these moving averages is how they are set up with various settings. If you use only one moving average line, you will see a lot of fake breakouts. Most traders find it confusing, especially beginners. Basically, these moving averages act as a zone or channel holding the price within the channel. It reduces false breakouts and allows you to enter trades after the price breaks through channels. Furthermore, three different moving averages work as dynamic support and resistance zones. This strategy is both practical and very profitable. We'll keep things as simple as possible with no complex indicators or tools, so it is very easy to understand and apply. Even if you trade with mobile devices, you can use this strategy to make some money. I'll quickly cross these indicators out so I can explain everything from the beginning. So this strategy works best on lower time frames such as 1 minute and 5 minutes, so it is easier to find profitable trades in a couple of hours. Now let's add our indicators to our chart. So in the Indicators tab, we'll search for EMA, and apply it to the chart. Now we'll go to its settings, and in the Input section, we'll change the length to 32. And also in the Style section, we'll increase the line thickness, and you can customize it just how you think. It will be easy for you to read and understand. I'm using an exponential moving average instead of a simple moving average because the exponential moving average responds to price action quickly, whereas the simple moving averages are smoother and slower to respond to price action. This is useful when looking at longer time frames because it can give you an idea of the overall trend. The exponential moving average is typically considered more appropriate for short-term trading. Also, the exponential moving average also reduces the lag by applying more weight to recent prices of each candle and tends to be more responsive to recent price changes as compared to the simple moving average, which applies equal weight to all price changes in the given period. If you also want to trade cryptocurrencies like Bitcoin, then take a look at the exchange BitGet. On this platform, you can easily make a deposit from your bank account and trade over 150 cryptocurrencies. You can even use leverage up to 100 times while trading to make profits even faster. You can find the link to BitGet below this video. In addition, you can use a 4-price layout to monitor multiple cryptocurrencies at once. BitGet is giving away a one-time deposit bonus of up to $3,999. Press the link below this video to sign up. Now we'll add another exponential moving average to the chart. And for its settings, change its length to 32. And also change the source to high. In the Style section, customize it however it will be easy for you to read it on the chart. Then we'll add our last exponential moving average to the chart. And in its settings, change its length to 32 also. And change the source to low. Customize colors and thickness as you like. And after this, our chart is completely set and we can start trading. So the rules for entering a buy trade are as follows. Number 1, the price should cross the moving average zone from below to above. This indicates that the current trend is about to change from bearish to bullish. However, this does not exactly confirm the reversal movement. Price may return to the previous trend when a large move like this took place. Price retraces to the lower level 90% of the time. The second rule is that the price should hold in the moving average zone. Sometimes the zone will hold the price perfectly like this, but most of the time you will notice a candlestick shadow cross down and quickly reject it before returning to the zone, or sometimes a bearish candle close below the zone, and the very next candle immediately go to the zone. These scenarios are valid with our second rule. Our main target is the price hold inside the moving average zone. Number 3, prices should escape the zone with momentum. You can use basic candlestick knowledge to identify high momentum candles. The main idea is to find a cross-up with a good momentum so we can identify the momentum just started and the market will continue in that direction. So when all of these conditions are fulfilled, you can safely enter a buy trade through this strategy. So we'll enter the trade here. You can set your stop loss either below all three moving averages, or below the swing low for buy trades. Our first take profit target is going to be 1 to 1, and our second profit target is 1 to 2. Price targets should be tight, like range between 1 to 1 and 1 to 2, but not below 1 to 1. When the price hits the first profit target, you can move up the stop loss break even, and wait for the price to reach the second profit target so it becomes a risk-free trade. And this would have been a profitable trade. You can re-enter on each pullback on the trend side, but I recommend taking 3 trades on a single trend and keeping the profit targets low in the second and third trades. The sell rules are exactly the opposite of the buy rules. First of all, the price should cross below the moving averages, leaving a gap between the price and the moving average. Then we want the price to retrace inside the moving average zone. The 3 scenarios I explained earlier can happen at this moment. Again, the first one is the price perfectly hold the moving average zone and does not cross the upper moving line. Second, the price move up and goes down immediately, leaving a candlestick shadow. And the third one is price close above the moving average, but very next candle reject the price and move down, printing a bearish candle on the chart. These 3 price movements are valid, otherwise you should skip the trade. By the way, if you guys are interested in amazing free buy and sell trades, make sure to join my Telegram group. The link is in the description. And the third rule is that the price must cross below the lower moving average with momentum and should close below it. So if all the conditions are fulfilled like in this trade, you can enter the trade. For sell trades, we can set our stop loss either at the recent swing high or above the 3 moving averages. And our first profit target will be 1 to 1 and our second profit target will be 1 to 2. You can select a profit target range between 1 to 1 and 1 to 2, but do not set a profit target below 1 to 1 and above 1 to 2. And this would have been an amazing profitable trade. So basically that's the gist of the strategy. Make sure you follow the rules properly and only enter a trade when all the conditions are fulfilled as explained. One more important tip: if the stop loss is too far away for a trade, you may also not enter that trade. If you guys liked the video, make sure to hit the like button, subscribe to my channel, and hit the bell. Thanks for watching the video till the end. I'll see you guys in the next video.